who's joining us on the technicals, while on the fundamentals, we have Mr. G. Chokalingam, who's joining us on the show. Very good morning to you, Lakshmikant, as well as Mr. Chokalingam. Thank you so much for joining us in ET now. And Lakshmikant, let me just get a quick view from you when you talk about the markets. How's the texture of the market looking to you at this point in time? Do you think that we are actually slowly and steadily moving in for a consolidatory phase after the rapid up move that we've seen?
Good morning, Cheryl. So market is looking good as it has already broke its key psychological levels of 2500, and it has not only broke it. It has not only broken it, but it has also given closing above this psychological level of 25,000. So we are expecting that current move toward the levels of 25,300, where we have seen a 78.6 Fibonacci retracement starting from the high of 26,277 toward the levels of 21,756. So overall structure seems to be in a positive territory, and the way market has performed, so we expect that this ongoing momentum will continue. Even if we look at the structure of the bank nifty, which has given a falling channel breakout on the daily chart above the levels of 55,500. So we expect that now in the upcoming days, the bank nifty will outperform the benchmark index, and now it is ready to move higher toward the levels of 56,100. And if it break this level, then further upside move in bank nifty toward the levels of 57,000 could be anticipated within upcoming days. So we are expecting a positive upside momentum. And if we talk about the broader market, then a small cap index is approaching toward its 200 DMA. So where we could see some sort of blip in the upcoming days, but on the daily chart, now it is looking that it has surpassed its 200 DMA, which is placed around the levels of 17,715. And if we look at the structure of Nifty mid cap, so which has been trending higher for last few days with the formation of higher tops and higher bottom. So we expect that this ongoing rally will continue in the benchmark indices as well as in broader market.
Okay, so that's the word coming in on the markets and the broader markets. But let's get started with all the queries that our viewers have started sending us. First up, we have Nikhil Sharma from Mumbai, who has sent us a query on ITC Hotels. Remember, this counter recently got demerged from ITC, so we will not have any technical view on this one. But as far as fundamental view is concerned, he bought it at a price of 205.46, and Mr. Sharma has about 100 shares. Chokalingam sir, if you can help us with your view on ITC Hotels.
Yeah, certainly. In fact, we have coverage on the stock. We have a buy recommendation. The latest results also gives us a lot more confidence. And in terms of enterprise value to EBITDA, it is significantly cheaper than Indian hotel. And secondly, it's still left with a lot of cash. And in fact, it has grown the cash after ITC, its parent company, left with 1,500 crore. It has grown it further. And there are a lot of greenfield projects are coming up. So I believe that this is the best to hotel stock particularly in the large cap space for the medium to long term. So we maintain a strong buy on ITC hotels.
Coming in on ITC Hotel, a strong buy coming in from Mr. Chokalingam. Let me take this next query coming from Sandeep. He's writing to us from Noida. This one is for you, Lakshmikant. IEX, actually, he wants a long-term view. So let me go to Mr. Chokalingam. IEX is the stock that I'm talking about, Mr. Chokalingam. He has about 570 shares of IEX, which he's purchased at a level of 203 rupees per share. What's the take coming in for this one or over the longer term?
Longer term, I am terribly negative on the stock. Maybe for short term, tactically, one can keep investing and booking profits because it is no longer running a monopoly business in India. BSE started through joint venture, even NSE started, and those two companies are making a lot of money in the equity segment. So it would be very difficult for any standalone power exchange business to compete with such giants. So I believe it's not a great stock for long term. Maybe in the short term, tactically one can play on this and buy and sell if 15-20% upside is there.
Okay, so that's the view coming in on IEX. But we have some more queries that have started coming in. Gautam from Mumbai is asking for a technical view on a better bet between SBI and Aditya Birla Sun Life. Lakshmikant, what will your view be with a 12 to 18-month perspective on both these stocks, SBI and Aditya Birla Sun Life AMC?
Looking at the structure of SBI, I think risk reward ratio is favorable as stock has maintained its upside posture above its key moving averages, which is placed around the levels of 750 to 740 range. And still, SBI is holding its 200 DMA, and we could expect a breakout in the stock at the levels of 830. So that would be the key hurdle for the SBI. So I think he can go long in the SBI at current levels with the stop loss of 750, and can expect the upside move toward the levels of 875 to 900 zone. And once it taken out the levels of 900, then we could expect further upside higher toward the levels of
Snap.
1000.
I think we have a patchy line with you, Lakshmikant. We'll actually try and reconnect with you and get your view both on SBI as well as Aditya Birla Sun Life AMC. Till then, let me just go to Mr. Chokalingam. Mr. Chokalingam, the next two stocks that I'm going to ask you a query on is IndusInd Bank and Vodafone Idea. We have Ghosh Dada, who's written to us from Delhi, and he wants to know what's your view on both of these counters. They have had their fair share of negative news flow. We've seen how the stock prices have been impacted by those news flows. What's your take?
I would avoid IndusInd Bank when you have so many, governance issue coming up one by one. And why to chase such stocks? Because there are more than 4,000 stock listed, and there are hundreds of small and mid cap stocks which give you a lot of opportunities to make wealth in the medium to long term. So that's my point. And within the bank, you have banks like Canara Bank, Maga Bank, Maharashtra Bank, or in the large cap, you have SBI, which are more promising, and they don't have any governance issue. And in terms of valuation also, they are all trading around one-time adjusted book value. So I would prefer, bank like Canara Bank or SBI Bank to IndusInd Bank. Whirlpool also, the problem is that, the durable business, consumer durable business is not taking off in the last 2-3 years. So the growth has moderated it substantially. So I would avoid Whirlpool also at this price.
Okay, so that's the word coming in on several banking stocks, but we'll slip into a break on that note.